Well, hello everyone, and welcome to today's event on the Buy-side Chief Operating Officer. My name is James DiBiasio. I am founder and editor of DigFin, which is bringing this event to you in sponsorship with SmartStream Technologies. You can find all of the content that we produce at digfingroup.com, where we're covering digital finance, fintech, and digital assets. So it's great to be here. We have some really experienced, terrific people, and looking forward to having a discussion with you. Please feel free to send us your questions throughout the event. If you just click on the Q&A tab at the bottom of your screen, and we will make sure that we get some time in to prioritize the questions that you want to hear from our panelists. So I'm going to introduce the folks that we've got speaking today. We've got Rob Scott, who's dialing in from First Sentier Investments. Rob is going to be speaking by audio today. And just to clarify, he is the COO at First Sentier. David Ng is the COO at CSOP Asset Management. He's joining us from Singapore. So it's a Hong Kong-based institution, but David has been working through the COVID time in Singapore, so glad he can make it today. Annie Lai, coming from a new startup called Helvet Capital, where she is a co-founder, a partner, and COO, and she has deep experience in the hedge funds world in Hong Kong, going back many years. And finally, joining us from the UK, Vincent Kilcoyne from SmartStream Technologies, who has been working with many clients on across the financial institutional spectrum on all things around helping them with efficiencies, integrating artificial intelligence, and so on. So we've got really we've got sort of large scale global investors, we've got regional investors, we've got alternative houses, we've got technology players. So we've got a terrific cast here to go through some of the biggest issues that COOs at buy-side are facing today and how they're getting through these. So the first thing I want to address is, obviously, I guess the most obvious thing is that we're still in COVID. We're now deep into year 2, and although we're all excited about vaccines and so on, we all know that this is not something where you just snap your fingers and go back to the way things were. This creates all kinds of challenges for COOs, last year, of course, it was all about how do we get our teams to work from home or in a remote manner. Now it's maybe, I think the challenges might be different. Maybe it's rethinking about what is the office, and this is a real test of leadership. It's been a test throughout, and it will continue to be. And so, of course, COOs are leaders in their firms. So maybe, David, you can, I'd like to start with you on this topic. What have been some of the biggest challenges that you've had to deal with, and particularly when we think about going forward, now that we're a year plus into the reality of COVID and working remotely?
Yeah, thanks, James. I think the COVID-19 crisis is unprecedented. Clearly, I'm a perfect example of the impact to the firm that I have been working in Singapore for the past 1.5 years, 1 year, 3 months to be exact. And my role is largely based in Hong Kong. So I guess the impact to CSOP, I think remote working from home has become the default arrangement at work, both in Hong Kong and Singapore. Whilst I guess we have adapted to the new phase quite readily at CSOP, and I think it's almost business as usual for us. I mean, clearly, in fact, for 2020, our AUM has gone up 60%, and that's when we have half the time working from home. I think with the vaccination coming, that's obviously thinking at the leadership level is things going to be going back to normal, and what's it going to be after COVID-19? Whilst working from home has worked out fine for us, but I think I think on several levels, I think we are missing quite a lot of integral parts of the former workplace, especially the physical interaction at the office. I think there are some challenges. I think that there is fatigue that's been experienced by the members of the firm, obviously not interacting with their colleagues physically. I think we have taken for granted what we used to have before, the water cooler conversations that people have built into the social fabric at workplace, how that helps with bonding and relationships. I think that's obviously quite sorely missing during COVID-19. As we hopefully move back into normal, I think it's important that we have a gradual phase back into a normal working arrangements. And to be frank, I think it's at the leadership level, I think there's just a lot that's just missing. I mean, learning, coaching, mentoring, these things that define the culture of the firm, I don't think you can do it just as effectively over Zoom. It's just not there. So at least for CSOP, I think where possible, obviously barring safety arrangements, we would like to see everyone back in the office if possible. Obviously, at the same time, we do recognize the fact that working from home is a possibility, and it's clearly proven that we can work effectively from home. So I think the workplace of the future is going to be a hybrid of sorts, where I think employees will be a lot more flexible with people working from home, and it's always been explored. In reality, it's way before COVID-19 happened, but I guess this crisis has really proven that we can.
Yeah. Rob, dialing in, I'd like to maybe take this a step further in terms of the impact that all of this has had on the industry and in your firm. I think if we had this discussion a year or two ago, I think some of the usual things that one talks about in an operating role is efficiencies. What's the balance now between efficiency versus resilience and business as usual versus trying to build in safety guards? Has there been a change?
Not a change so far. I mean, similar to David, I'd say not a change so far, but obviously we're going to have to adjust moving forward. So I think everyone's still working in a productive, way. So there's no questions in that area at the moment. But obviously, if this went on for another couple of years, then that would become more of a concern. There's definitely been some personal stress or people working from home with family, kids doing schooling from home. So staff wellbeing has been a factor, but would only become more of a factor as we go on. So at the moment, I mean, 2020 was pretty much similar to David, sort of a BAU, and we still had a decent year last year. But I think everyone was just focused on switching to 100% working from home and then working within an environment. But as this goes on, then we're obviously going to have to set up a more permanent hybrid model that works with the combination from the office and from home. We're obviously going to have to work out the best way to work together, to still network together, to still meet occasionally face to face. Without the networking and the cross-functional networking, then innovation's really impacted because you're just not going to, the water cooler conversations or the conversations face to face with different functions, or even within your team, just aren't going to happen in this current environment. So, trying to come up with different ways to connect with staff, even the virtual meetings that we're all doing at the moment. It's hard to, when we're all in a meeting room and we're doing those meetings, apart from saying everyone's got to turn their phone off and put it under the desk, that way we can all focus on that meeting. Whereas at the moment, we can sort of beat our screens and take a sneaky look at our other screen while we're on the meeting. So we're not getting as much value out of those meetings as well. So I think we've been okay to date, but we're clearly going to have to come up with some tools moving forward that can manage this hybrid model for the long term. I mean, there's opportunities as well. Obviously, staff can technically not have to live in the CBD. We can recruit staff that may be based from outside of the CBD. And there has been some benefits around the family life and being able to, be home for dinner, maybe be home for the kids' school, homework, but also there's obviously been some downsides where people have got into bad habits around long hours, etc. So I think we've done okay to date, but moving forward, clearly we're all working out what that hybrid model will look like, how we can make sure we look after staff welfare, how we can make staff resources available to the staff so they can continue working in this environment. Office equipment, the way we configure our office, our office equipment at home, so a big focus on that area as well.
Okay, thank you. Annie, you launched a new fund in the teeth of the plague. So that must have been, it's stressful to start a new venture anyway, and then doing it with all of this COVID craziness going on. So when you're talking about actually not just running a business, but setting it up and running a business, how do you think that this affected some of the choices that you made? Annie, can you hear me? No, okay. She must have a volume issue. We'll get back to her with that. While we're getting Annie back on, Vincent, I'd like to ask you a little bit about what has been, amid all of this, the issues that buy-sides face in general have not gone away. Some of the issues around cost of compliance, costs, new requirements from their investors. When you talk to your clients across the world, what are some of the issues that buy-sides are dealing with right now?
Right. Well, I just want to revisit before we step into that direct topic. I'd just like to go back and review some of the comments that David and Rob have made. One of the observations, because David was talking about working from home, etc., and the hybrid model, there's an interesting term now that's being used rather than working from home. The term that's now being used is living at work. All right. So this is increasingly, and this kind of goes towards what Rob was talking about around starting work at 6 a.m., 7 a.m. until whatever time it is. And I have global remit. So I have teams ranging from Singapore all the way through to Philadelphia. So I think that we all know what that typically means in terms of timing. So that was one point. However, it's on the philosophy that it's an ill wind that blows no good. I was speaking with a number of finance specialists a few weeks ago, and they were saying that on the back of the pandemic and the new working from home or living at work regime, they've actually been able to re-engage with resources and expertise who had left the commute. They had walked away from the city or their office or their work because of the commute. And now they're actually re-engaging because of the fact that they can work from home. So a lot of companies are finding that they're actually able to bring in some of the expertise that they had lost because of the commute. So this is an interesting philosophy. It's kind of on the basis that it's an ill wind that blows no good. One of the things that we've also found is that the pandemic has caused us to actually rethink some of our working models. As you know, we're a global software organization with over 1,000 financial institutions as clients, ranging from buy-side through extremely large sell-side. And as such, we use extreme agile programming, pairs programming. And you have to kind of question the approach of, well, how do I do pairs programming over Teams? And when we're having huge reverb. But when you actually use this approach and you're forced to do it, you actually find it incredibly successful and you find new ways of working. So we've actually been able to drive that extremely successfully. One comment that was made about culture, I personally have had to redouble my efforts because I would perhaps become lazy and become accepting of the fact that I could fly somewhere, spend a few days in one of our locations and engage with the team. And on the back of the pandemic, I've actually had to invest a lot more effort into having my weekly or monthly calls over Zoom, over Teams or whatever. And in a weird way, our team culture has actually become stronger through the midst of this, which means that we're going to have something even better when we come out the far side. All right. Now, when we look at the industry in general, and this is not only for the buy side, but for the large sell side as well, 2020 is seen as a game of two halves. What do I mean by that? When we went into lockdown, everybody frantically looked at their BCPs and realized that social distancing had thrown their BCPs out the window, particularly in the case of trading rooms. So if you had an organization with a trading room in London and they had a trading location, a remote trading location, they could not fill that 50%. They could only fill it 25 to 30% because of social distancing, and they could have 25 to 30% of their trading people in their main location. That meant that they suddenly had to tool up all of these people's homes with data feeds, trading software, desks, screens, and everything. And you now had to take people out of an incredibly noisy, high human interaction environment and put them in a room where they're no longer having that. And particularly for traders or for people who are market active in the market and who feed on that type of noise, I think that they're actually going to find it extremely hard. So I think that it's incumbent upon us to address those issues and to redouble our efforts in ensuring that there's the correct support structure for those. So I think that would, and I'd be interested to see what some people's perspective on that would be, if they agree or disagree. From my perspective, I don't know if you know much about us, but we provide solutions to a vast array. And it's not only on-prem, but it's also through our on-demand. And one of the interesting things that we found was a lot of the organizations were coming to us asking if we needed to renegotiate our SLAs. Because they were finding that a lot of their BPO and hosted service providers were asking to renegotiate their SLAs on the back of the pandemic impact. Now, thankfully, we didn't, because we had a very strong leader in that who had structured the organization to be able to absorb that. So this was a very important element for us. We could see that all of our clients were entering a stressful period. The first half was to reestablish BAU. The second half is maintaining BAU. And this does mean that organizations are not investing in a lot of innovation because the cost of BAU has gone up. The cost of compliance, the concerns around data security have also gone up, because it's easy for somebody to log in from remote and take a photograph of a private client's details. And this is something that is increasingly becoming an area of concern across the industry, and a number of techniques exist. And I'm increasingly worried about things like operational losses. So, for example, there was a study that looked at operational losses across the asset management community from 2014 to 2019. And there's a new one coming out, I think, in May of this year that looks at the 2020 impact to a certain degree. And it looked at the areas that I focus on are breakdown into client, products, and business practices, and execution, delivery, and process management. And the stats are across a small audience. About 80 organizations were assessed, and they found that there were about 1,200 events in client, products, and business practices operational loss events over a period. And the average cost of that loss was 1.2 million euros. The average cost of one of those loss events. So this, for me, is a substantial cost that really a lot of organizations are not looking at. The cost of operational losses. Many people see it as being an acceptable cost of doing business. I think increasingly, on the back of what we've gone through, people are going to look and say, what are our costs of operations? What is the cost of being wrong, of getting something wrong from an operational perspective? What is the cost of a missed corporate actions event, or you don't miss one of, if you miss one event, what's the impact across my client base? So I think that when I look back at it, there are many things we've learned. There are many things we'll have made that are stronger on the back of it. And we're going to be re-looking at the way in which we process our operations, the relationships that we have with our solution providers, our solution partners, and the industry participants in general. So that's my contribution.
Well, let me ask some of the let me ask a bit. I still want to get back to Annie, but maybe David, you can give us a quick feedback there. Because of the issues that we've all been dealing with for the past year plus, have you had time to actually think about, is there a way to do things better, or do we just think the processes, or has it really just been kind of a scramble to keep the lights on? You're still growing the business. It sounds like you gave us a huge AUM jump figure for CSOP. Is there time to think about some of these bigger issues around how are we structuring our technology and our workflows?
Yeah, for sure. I mean, digital transformation is always been my pet agenda at the firm. Even pre-COVID, there's always a thinking about how are we going to prepare the business for the future, and it's inevitable we talk about technology and infrastructure because that's the base on which the business will grow. So obviously, the COVID-19 pandemic has brought some challenges because, like what Vincent was saying, we had BCP plans in place that were not literally prepared for the COVID-19 situation. They were literally changed and thrown out the door just to react because of all the safe distancing measures that we had to put in place, and obviously at a pace on which the crisis evolved throughout. And the longer term stuff, when we talk about redefining the infrastructure, for example, like we think about infrastructure as a service, moving parts of our on-premises infrastructure onto cloud because we are thinking about scalability, we're thinking about flexibility. We are in an age of data information. So, I mean, at its very core, we are trying to rethink about our investment management processes. How do we actually capitalize on the data that we're generating, that we're receiving, to drive our investment management function, or investment management cycle. And some of the other stuff that we had to think about is defining what is core to our business and identifying those that is critical to our success. I mean, obviously, investment management is a big piece, research is a big piece, product strategy is a big piece. Then we have things like middle office, collateral management, things that are very important. I'm not saying they're not important, but perhaps less critical to the investment management piece because at the very heart, CSOP is an investment manager. And we have partners that are obviously, they have the skill, the expertise to do this much better than us. And that brings up the topic of outsourcing. So we think about important but non-critical functions that we could potentially tap on the expertise and resources of our partners because they have built out large-scale utility teams, functions that could basically help you scale the business. And so that's been on my agenda for the last 2-3 years, and redefining what is important to us as an investment manager, and obviously looking for ways to work with partners, tapping on their resources to help scale my business, and then at the very end of it, then applying technology to the activities that I've defined as important, because clearly I'm not going to be spending resources are limited, I think, in every organization. I'm not going to be spending money on every new piece of machinery out there. So I choose to focus my spending on the activities that I define as core. That's going to provide me the competitive advantage to compete against my peers. So that's been in place even before pre-COVID. I think in certain instance, moving on to the flexible infrastructure that I mentioned earlier, I think somehow COVID kind of accelerated that progress. Suddenly, we realized that we could have technology changes or onboarding of new systems to COVID crisis in as little as 2 weeks. It used to take 6 months or maybe a year to even put through a tech change. And I'm pretty sure at large institutions, say, for example, like the Tier 1 banks or Tier 1 asset managers, you must be talking about 3 to 5 years out for any sort of strategic change to happen, at least. But literally, COVID has proven it's possible that we could put in new technologies in place in as little as a couple of weeks. So the whole paradigm has shifted. So I guess for us, definitely we are looking at some of these initiatives, and then definitely we are definitely trying to pick up the pace at which we are doing this at CSOP.
Yeah. Okay. That's great. Thank you for sharing that, David. I'm struck really by the comment that you can now, things that used to take months, if not years, you can now, just roll out in a couple of weeks. And it's, it's just a testament to the way that technology, and I think also a lot of the agile learning from the fintech community and the broader tech community has really, found a home in many financial institutions now. So I think we're just going to see a lot more innovation across the board because of it. Annie, you're dialed in. I hope we can get you now. I'm really interested to hear your story. You launched Helved. You helped launch Helved Capital Management. It's a TMT-focused hedge fund based in Hong Kong. You've got long experience. Word Ferry for many years, where you were one of the core members of the team, and also in private equity. If you could share a little bit about when, as the COO of Helved, when you were setting up a new business, particularly amidst the chaos of COVID, maybe following on some of David's comments, like what was core, and what were you looking to do from a outsourcing or a tech perspective, or just to sort of set the correct foundations?
Right. I think I have already run one cycle when I set up Helved. I can benefit from my experience and try to do an enhanced launch. But nobody could have planned for a COVID situation. And so when we launched the business, we were taken by surprise in a lot of situations. And yes, it's kind of like we are forced to rethink how to survive, basically, because we launched our fund, we officially launched our fund in February 2020, right in the middle of everything. The impact was as bad as like you can't actually complete your office renovation. You can't hire people. But the good thing is also that everybody around in the ecosystem, they are aware of the situation, and everybody is very willing to step in and help. So, for example, it was very difficult to hire, and therefore we were able to rely on our fund administrator, and they produced a lot of extra risk report for us to help us cope with March 2020. So in a way, when you cannot scale up as fast, you can rely on the service provider who already had the scale. And when you think about the system as well, like right now when we compare our surrounding our ecosystem, there are a lot of people who are already, for example, who can quickly bring you up to date with cybersecurity compliance, who can quickly give you OMS, PMS. So it is very different environment when compared to the old time when I first helped set up a Work Ferry. So wow, and a lot of times actually, even though I had the experience, we should also be open-minded about what is available in the current environment and not be kind of bound by what already had been done in the past. So I think that is important. So the most hit aspect, I think, is actually capital raising. The travel, we were hit more by the travel restriction than anything else. So the travel restrictions stopped all interaction with the investor on a face-to-face basis. So it takes a long time before people are willing to actually rely on virtual interaction. And I would say the entry barrier for startup manager actually has increased. So it takes a long time before investors accept that this is the new norm. I think only in September last year, then people start to realize that, okay, we cannot just say, let's forget about, and thank God, because in 2020, actually, we invested in technology, and because of the returns, people start to realize that if they just try to stick with their existing manager, then they are missing returns. Because without that, then maybe people still feel that it is safer to be with their existing manager. And so that is an important part. But then the coping methodology, there must be coping solution. The coping solution would be, for example, to have a lot of reference check. So they will do a lot of reference check just to compromise. And another observation we had is also maybe the first fee allocators are harder to close, but allocators talk to allocators. So once you close the first fee, and if they are quality and sophisticated, then the rest are a lot easier. So that's my experience.
What do you think? Forget about COVID for a minute, Annie. Just in terms of the world we live in today, regardless, in terms of tech solutions and so on. What was probably the most different thing about setting up Helved than in your previous roles?
Actually, the setup cost, in a way, is lower because there are so many outsourced possibilities. So you don't have to build everything yourself. In the old days, if you want a top tier infrastructure, you have to have your own server. You have to have server rooms, and you have to have a big team. But right now, I think the setup is a lot leaner, and in a way, you can rely more on the prime brokers, on other people who have already done that. So right now, I think the biggest difference is right now there are so many partners in the ecosystem that you can look to relate to them and leverage from their experience. So and I think it will be important for today's COO to be outgoing and and build a relationship with the partners in the ecosystem. In the old days, probably there may be some people who will just want to do the things by themselves and not talk so much with the partners in the ecosystem. But right now, I will strongly encourage you to talk to the payers, the partners in the ecosystem, and just to be on top of everything.
Yeah. Okay. That sounds like good advice. And maybe that's why I'd like to go back to Rob and get your take on Annie's comment about partnerships, ecosystem. Classically, I guess, you work at a classic global asset management company. And I don't know to what extent, even people have thought about, usually even use the term ecosystem. To me, in my experience, is a very kind of fintech industry kind of term or a Silicon Valley buzzword. Is that something that's permeating your role these days, Rob? I mean, are you thinking about partnerships and ecosystems, or are you still in a model where you've got your on-prem, you got your servers and you've got your, things that you build yourself and a few classic relationships, but not this sort of, spreading it out amongst many parties?
Look, we've moved, as everyone else has, towards, cloud-based solutions, SaaS solutions, even infrastructure as a service type solutions. So clearly off the back of that, then you have a lot of relationships, a lot of close and long-term relationships with various IT and just general applications, business units or applications. So there's less and less that we do in-house, and there's more and more services and outsourcing, and therefore more in-house oversight of services of suppliers providing their services. So that's definitely a direction. Moving down the digital-based sort of client-facing solutions, and obviously you're starting to interact with maybe some of the old names we used to always interact with from a supplier's point of view. There's a lot of new names, so it's trying to get the balance right between going with the names which could be less risk, probably more expensive, and possibly less innovative, and then taking the time to consider solutions that are more innovative, give you the opportunity to differentiate more in the market, but have more risk to them, and possibly cheaper costs, purely because you can be early mover with these guys. So that's probably, but the underlying base of what you do is you've still got your IT infrastructure. You're primarily using a lot of cloud-based and SaaS services as part of that. But we're still using generally the recognized names in that baseline infrastructure. But when it comes to interfaces and applications and new business user applications, that's where we're probably getting a bit more of a mix of the usual names and some newer entrants into the market. And so we're just trying to make sure that from an enterprise architecture point of view that we have a good mix of not just always being lazy and going with the known names, but also considering some of the newer technologies that are coming through.
Yeah. Okay. Thanks. We've got some questions coming in from the audience, and I want to just encourage everyone to feel free to go to the Q&A tab at the bottom of your screen. We certainly are keen to get your questions in. So I'm going to send this one to you, David. It's kind of building on what Rob was talking about, but the question is, how much time now, or maybe let's be forward-looking, how much time this year do you expect is spending on business as usual issues or automation? That's the question. Maybe automation is sometimes business as usual, but I'll let you interpret that as you want. So, David, can you give us a take on that?
Yeah, I think I tend to agree with you. It's hard to make a distinction between the two, given the age we are in today. BAU, I guess, to facilitate the ongoing running of the business. Yeah, I guess that must be taking out at least 50% of our time. And the thing is, and I'll be frank, every single day we are spending a large part of our time looking at our existing processes within our BAU. I mean, presumably when the audience asks BAU, they must be referring to the day-to-day processes that we are dealing with in terms of facilitating our business. So I'll say half and half. We do it every day. Obviously, that we deal with large volumes, and for most buy-side institutions, we tend to be very lean organizations. We don't have hordes of people to do the daily processes. So because of that, clearly we do spend a lot of time thinking about how to optimize our process. I'm not talking about automation. I'm talking about optimizing our processes, thinking in terms of the number of steps I need to accomplish a task. Do I really need to do this, or can I redesign the whole process to perhaps come up with an optimal design before I even think about technology, before I think about automation, before I actually get my developers to write a line of code? Does this process actually make sense? So we spend a lot of time doing that because from my philosophy is if you have a bad design, there's no point applying technology to it just for the sake of applying technology, because it tends to magnify a bad process probably 100, 1,000 times. So I guess we do spend a lot of time in terms of thinking about what we do on day-to-day basis. And once we are confident and certain that we have obviously achieved an optimal workflow, then we talk about technology, and then we try to leverage on technology to change the way we do our business. I think people tend to put a lot of emphasis on automation. I think it's an overused word, and could be it's double-edged sword. I think people need to be mindful of that. Okay,
well, let's be humble then about what that means. I want to follow up on that with Vincent. We've been talking about BAU versus innovation. David, I think, put a cautious note there, but we're also seeing a lot of changes just to the marketplace itself. And, these changes may not be relevant for all fund managers, but, if we take some of the, I guess, just some of the crazy events that we've been witnessing just this year alone in the stock market, if we look at, the Robinhood and the GameStop meme stock phenomenon, where now, certain types of firms are being impacted by things that are coming out of the blue, or different ways to invest in stocks. I guess the rise of sentiment investing is now becoming a much more prevalent power in the marketplace. This week we've had some news out of Wall Street about some crazy offloading of massive positions. It seems that the markets, although the good news is that the markets are still going up, but we're having a lot of volatility and just a lot of stuff, we would have considered crazy, but now seem to be almost like normal. So Vincent, are you talking to people about what does this mean that buy sides need to do to make sure that they are able to deal with what seems to be a more volatile environment?
All right, so just to follow through, I smiled happily when I heard David talking about reviewing the way in which they solve problems. Does it make sense? Why are things being done a particular way? And the number of times that we see that, we focus very heavily on what we term best practice in everything, in corporate actions, collateral management, cash and liquidity operations, all these areas. And the number of times that we talk to financial institutions and they want us to change best practice because of the way they've always done things, and they want to automate the way they've always done things, which is almost an oxymoron. Because in order for you to automate, you've got to improve, and you have to remove some steps from the way that you used to do things. So that's one thing, and I found it quite refreshing when David said that it was necessary to look at how they do things before they automate it, because technology, when it's badly implemented, actually accentuates and amplifies the problem even more. Right, so I'm totally in agreement. And David, I'll speak with you separately. We seem to be cut from similar cloth. All right. What we did find, because of the diversity of what we do and the diversity of our client base, we actually spoke with a number of organizations, and we found that there was a term that was being used rather interestingly, which was they had a number of all hands moments during 2020. And we found that there were a number of all hands moments in a rather interesting area, which was in collateral management, because the extreme volatility caused a massive volume spike in margin activity. And this, for a lot of organizations, caused real all hands moments. All right? And that really did, for a lot of organizations, it showed what happens when you have people working from home. You don't have access to the 20 or 30 years of experience of What happens when something goes wrong? You know, I've got people who know how to operate the systems, and then I've got the people who know how they work. And they're not the same thing. People who know how the processes work. And there was a lack of access to that expertise. As in, it's not in the office with you. You can't go and talk to somebody over the cooler to say, I'm having this problem, or quickly sit down and share the problems, you know, in a call, and call on that one person who knows how this was done, how you address this problem operationally. So one of the things that we have found is the challenge of operating BAU has evolved to a certain extent. It has been pernicious in its cost. Absolutely. The cost of maintaining BAU has gone up. The risks associated with that have gone up. And it does mean that the industry as a whole is having to look at all of the participants in the information value chain or the information supply chain to ensure that data quality is paramount. And they recognize that the one thing that an organization passes from organization A to organization B to organization C throughout the supply chain is data. And the quality of that data determines the reporting, the decision-making, operations, error rates, and everything. And I think that one of the key takeaways we're going to have is that every participant in the supply chain is going to have to reevaluate how they make information available, the quality with which they basically benchmark that data, and the speed with which they respond to requirements to change and fix problems. So it's the agility to respond to problems, particularly in data, because that's where we are. We're operations based on data. We're decision-making based on data.
Let me ask some of the CEOs about that question on data, because obviously it's become, I don't know which buzzword you want to use. It's the new oil or what have you, but this is not new. But certainly, maybe Annie, because if you're new launch, how did you think about the questions of data that Vincent has raised when you're putting together a new fund? I mean, is that something that the quality and the risk associated with data, is that as important to you as a startup hedge fund as it would be to, say, a large institution like Sentier?
I think data is important to everybody, but the problem with data is, how do you get the clean data? It's so difficult to get clean data. Well, we had come in with because we are a technology fund, and all the founders are very data-driven and aware of AI, trying to use technology in any way we can. So we come in with that bias. At the same time, because whatever system you are trying to use, I guess what is happening in the marketplace that cause challenges are, for example, you keep coming up with new IPO. In the past year, we have so many IPOs, and then the betas are moving everywhere. And we also had the environment of like a very volatile period, and I think crises are kind of the new norm. So we all have to deal with this. If you don't have good data, you cannot react fast enough. So in order to survive in the market, I guess nobody can ignore data. The challenge is like, how do you ensure the quality of data is there? How do you distinguish the data that are relevant to you from noises? So we're getting more noises because data is everywhere, and we're also getting a lot of low quality data. So I think that those are important considerations for, I guess, firms of any age.
Yeah, and can you give us some insight, Annie, into like how you deal with that issue? I mean, is it something where you have to rely on the experience of your team to figure out what is good or bad, or is it just costly? You just have to basically buy data sources, and you either can afford it or you can't. How do you get around those issues?
To get around those issues, you will need people who understand what is reasonable and what is to be expected, right? So, for example, we have seen some tech IPO, and then the system give you a beta of like 7 to 9. Do you actually want to use a 7 to 9 7 or 9 kind of beta? Well, then we may want to override and say, hey, given what we are aware of and we understand, when the data point is only like, let's say 1 week, then that data is unreliable. So you may want to override it with like fee, and then the report that you get may be more reliable. But it takes experience, because if you're not familiar with this system and what is to be expected, then it is very hard to come in and say, hey, this 7 is unreliable, should be repaid. So there are a lot of that kind of situations.
Yeah. Okay. All right. Very good. I'd like to move into the last phase of today's discussion, and maybe go from data into some of the solutions that people are looking to do, and get a sense of your agendas for 2021 when it comes to tech, automation, AI. David, can you maybe give us a quick roundup of what's on the agenda for you?
Definitely around our RPA. That's basically being applied to a lot of our processes here, but at the very core, and something a lot more strategic, is around our data strategy. In fact, I think the data strategy will be at the core of our technology strategy. So we are definitely at CSOP, we are looking at the way how we manage data. I think both Annie and Vincent alluded to the processes on which we manage data or process data, the ETL process, how to make sure that clean data. I guess before we go into all the technicalities, then before we address those technical issues, we need to address what exactly we're using this data for before we actually think about that whole processing of data. So we've been looking at some of the data that we need as a firm, and broadly we classify them into 2 categories. One is our defensive data. I call it defensive because these are the data that we need to absolutely get right, especially those that have potentially regulatory implications that could result in massive fines for us. I think that we tend to put a lot of focus on in terms of making sure the cleanliness, the integrity is absolutely spot on. Then we have that offensive data, where we consider part of our business expansion plans. We need data to give us insights to drive our business, to react to the trends that are constantly changing. So if I were to apply the same sort of strategy in terms of processing and making sure my data is absolutely clean before I can use it, I think I'll miss out on everything else that's just gone by. So we have adopted some strategies in place to make sure that we, for specific business purposes, especially when planning for new products or stuff like that, we try to get data or insights in front of business decision makers as quickly as we can, and try to make sense of it, and we move from there. And then so that we could be a bit more agile in the marketplace. And at the same time, it's always ongoing. We spend a lot of time making sure that the stuff that we need to get right, we get it right. Because to be frank, it's such a huge piece. Data is so important to every organization. But if you employ the wrong strategy or dealing with it, you might find yourself going around in circles and wasting a lot of time trying to get clean data, but then again, with no specific use. Yeah.
So a very pragmatic approach. Obviously, a lot of opportunities out there that you highlighted, but the defensive stuff has to come first. The more aggressive stuff is important to grow. But you have to make sure that you don't lose track of what's really important, and also at the same time sometimes you have to go with what you got, and you can't wait for the world to be perfect. Rob, why don't you share with us a little bit about what's on your agenda for 2021?
Yeah, look, this year, obviously to continue to try and continue to support the business in this current, COVID-19 environment, and moving forward long term with more people working from home. Look, the overarching objective is always to, for our type of business is to continue implementing and operating a single global, scalable, cost-effective, low-risk business model at the required level of quality. So that's the overarching agenda item at all times for our type of business. We're obviously continue working with the distribution and marketing teams on, giving them whatever digital-based sort of client-facing solutions they need to differentiate ourselves in the market. We're setting up a global data capability. I mean, we've obviously always had data in various systems, but we haven't necessarily had the governance around that, and also had ways to bring that data together to then provide the business with some, data-driven decision-making opportunities. So we're really looking to optimize the global data, the data side of things within our business. Big body of work to continue uplifting our information security part of the business. I mean, that just keeps moving at a very rapid rate. As always, we've got a bunch of regulatory requirements for the various regions that we operate in. And, we've got a fair bit of outsourcing. We've got a large number of suppliers and a lot of outsourcing going on. So we're continuing to uplift our sort of supply governance and management, procurement processes and enterprise architecture processes. So they're probably the main areas that we're focusing on this year.
Okay, well, that's a lot, as always.
Yeah.
But I think you've given us a pretty comprehensive walk through all the different things that comprises a chief operating officer's life and demands. We got a comment in from the audience. This person said it's more of a statement than a question, but just wanted to say that adopting data without being able to understand and measure its quality is very risky. So I think that echoes a lot of what we've heard from the other panelists. So appreciate the comment. Thank you for that. We're almost out of time. I guess I'll just ask, since I'd like to end with Annie. Annie, maybe you can give us a quick feedback on that comment that data is risky if you can't understand and measure its quality.
I totally agree. I think we need to be able to dive into the data, understand what the data is trying to tell, and if the data is not sensible, what is causing that distortion, and to adjust and be practical in trying to understand how to adjust that distortion. We're doing that kind of every week because we do review all our data on weekly basis, and hopefully that gives us our edge. Yeah.
Okay. Great. And we've got maybe 1 minute left. Vincent, what do you think will be the most important thing that COOs will need to get right in 2021? Oh, okay. Well, I lost Vincent there, but we are about at the end of our hour today. I'm very grateful for our speakers to make time. I'm very grateful for the audience to make your time and send us some very good questions and comments. Thank you so much. It leaves me to say we've been listening to people from a range of different buy-sides in terms of their style, their size, the youth of the organizations. Also, we have a range there. And I think, not to mention the comments from Vincent, who sees a bigger picture of what's going on as he talks with firms across the spectrum worldwide. I think we've got a combination of, obviously, business as usual, of course, is always there. There's always issues around continuity, continue to drive those efficiencies, establish leadership within the firm. And so those things, I think, are kind of evergreen and are always there. And they probably, rightfully so, occupy the majority of time. Yet we're also seeing that automation and AI is moving into new segments. I think someone earlier mentioned corporate actions processing and reconciliations. There's more of the process that tech can be used to address. We heard more about an ecosystem approach rather than just the traditional do-it-yourself. We heard about being able to deploy much more rapidly in a more agile format. And I think that COVID has obviously been forced everyone to ramp up in this way. It's in some ways it's been the COO of all the COOs, forcing them to be more agile, more safe, more secure, more efficient, all of the above, while working in adverse situations. But we've also had great markets. We heard from CSOP that they've had a terrific 2020. I think, I think just yesterday or today, we heard that the stock market in Hong Kong has had a record number of IPOs. I mean, it's been gangbusters here. So it's also a time of great opportunity. So with that, I want to close and thank Rob Scott from First Santier, David Ng from CSOP Asset Management, Annie Lai from Helvet Capital, Vincent Kilcoyne from SmartStream Technology, and for DigFin, I'm James DiBiasio. Have a great day.
Thanks, everyone.